All right, so I would like to introduce our next speaker. We have Mr. Fred Pye. He is President and CEO of 3IQ Corp, and he'll be discussing the velocity, volatility, and value of Bitcoin. How high can it go? So with that, I'd like to bring out Mr. Fred Pye.
Thank you very much, Brittany. Thank you. Welcome, everybody, and a good morning for you. We're going to try and liven it up a bit and try and get some things for you to think about and discuss over your lunch period. But I think I've seen everybody who comes up here talks about they really how got involved in Bitcoin. And I remember the very first user case I had in Bitcoin. My son had got a scholarship to go off to school in a prep school in Boston, and his allowance was $200 a month. So the very first month I sent him $200, and I get the phone call on my cell. He says, "Dad, I thought my allowance was $200. I said, "Well, it is." He says, "Well, I only got 160. I said, "Well, CIBC took $25 off, and Bank of America took $15 off, so that's all you get is 160. And he goes, "No, Dad, that's not how it works." And I go, "Yes, son, that's exactly how it works." So I said, well, he goes, "Well, what are we going to do about this?" I said, "Well, open yourself up a Bitcoin wallet at Coinbase, and I'll send you a Bitcoin." So the next month, the first of the month, I said, "Okay, you ready?" I go, bing, and his phone goes bang, and he has $200 worth of Bitcoin. He goes, "Wow, that's great." So I sent him one Bitcoin. So then the next month, the first of the month, I go bing, and he goes bing, and he goes, "Dad, you only sent me 0.9 Bitcoins. I said, "Well, Bitcoin's gone up a bit." He goes, "Well, no, Dad, that's not how it works." I go, "Yes, and that's exactly how it works." To this day, he has kept all his Bitcoin. I said, "What are you doing with all your Bitcoin? What are you living off of?" "Well, I'm spending all that fiat currency that's in our bank accounts and devaluing as we speak." And I said, that's the next generation. Really how I got involved was actually about 4 years ago, three years ago, when we were running I was part of a Landry Investment Management running an ETF portfolio, a multi-asset momentum portfolio that took like the best 6 out of the top 17 asset classes, and we would move them. And we just kept watching this thing. We've run it for many years, and I'm going, all of this stuff is correlated. I've got to find something else that's going to be able to be, when all of this party falls apart in the bond market, in the stock market, we're going to have to find something that's really going to have to be able to offset a lot of this. And in fact, the quest of the entire hedge fund industry has always been to find that perfect non-correlated asset class. About 4 years ago, I got associated with a company called ARK Invest out of New York. And out of New York, we would go down to Florida, we do all these ETF conferences, and in March of 2016, a couple of things happened, a couple of very important things happened. Number one, Bitcoin became AML and KYC compliant. So all the exchanges, all the Bitcoin banks all had to do proper AML, KYC compliant in most of the developed countries in the world, and that was very key. Shortly after that, Chris Berniske of ARK Invest and Adam Whited of Coinbase wrote a white paper called Ringing the Bell on a New Asset Class, and talked about how that asset class, what it was going to be like going forward and why people should take a look at Bitcoin as an asset class. So 3IQ is the first regulated multi-crypto asset money manager in the country, and in fact approved by a regulatory agency anywhere in the world that we know of. So I'm also the President and Chief Compliance Officer, so I want everybody to make sure you understand that we're not here to try and sell you anything, but we're going to talk to you and stimulate you. So we're also going to spend a lot of time on economics because they want me to talk about value, volatility, and velocity of Bitcoin. And it all comes down to your very simple first economics class you ever had, which was supply and demand. And if you take a look at the Bitcoin supply chain, what's really keen about Bitcoin going forward is already 80% of the supply is into the market. So we now have virtually a flat supply curve for the next 140 years till then becomes perfectly flat. The reason why Bitcoin was created in 2008 with the financial crisis is because the irresponsibility of printing money at QE1, QE2, and QE3, the generation said, hey, our next generation, we're going to have to pay for this. So Satoshi Nakamoto and everybody else said, we can do a peer-to-peer payment system that could also become a store of wealth because of our supply curve. And finally, gold outstanding. Do not let anyone get you into the debate on what's better, gold or Bitcoin, because they are completely mutually exclusive. Yes, they are both stores of value. Gold is a beautiful store of value. A 4% inflation track for our lifetime has helped us in the bad years, and it'll be there forever. It's not Bitcoin versus gold. They're both beautiful stores of value. However, when we take a look at the demand curve, what happens when you have hockey stick demand and fixed supply? The price goes up. It's the law of economics. So my contention to everyone here would be, as long as wallets are opening up at an astounding rate, as long as transactional value continues to rise, and as long as total Bitcoin transactions is on the path is on the way up, my estimate is that the price of Bitcoin will continue to rise. But when we talk about that non-correlated asset class, Bitcoin has no closer than a minus 0.2 or a plus 0.2 correlation with any other asset class 99% of our assets are invested in. This is that perfect new non-correlated asset class. But everyone says, oh, but Bitcoin, it's so volatile. It's the volatility of Bitcoin that drives us crazy. When I say, well, it's a lot less volatile than it used to be. And that's usually not a good enough answer. But when you take a look at volatility, and yes, the volatility has continued to increase over the last year or two. It's been a good month, actually, a little less volatile this month. But since it's been starting to create, is volatility bad in the investment business? Not really, because we know anything with a volatility of 0 probably has an expected rate of return of 0. So what we do is we put two things together. We put volatility and performance to determine a risk-adjusted return of an asset class. If you had been adding Bitcoin to a client investment portfolio in the last 6 years, you would have lowered the overall volatility risk of the portfolio and increased the portfolio's return. The Sharpe ratio is a perfect measure, not a perfect measure, sorry, I'll take that back, is a measure of risk and return. The Sharpe ratio, the risk return of owning Bitcoin, has been greater than any of the other asset classes we typically invest in. So then people started to ask me, well, what about the velocity? What about it being used as a money and as a currency? And we've talked a lot about that. Normally when I give my crash course on Bitcoin and blockchain, I actually show people two very important slides, and I put them up live on the internet. One is the Bitcoin blockchain, where you see every Bitcoin transaction going on, tradeblock.com, if you want to write that down. You see every transaction going across, you see it go into the memory pool, then you see it go into a block, and you newly mined block, and then you see that block go around the world. The next slide we show them is the actual Bitcoin block line on bit nodes, and we show them that Bitcoin is the most powerful, secured computer network in the world. It is what we call quantum hard. It will take all the quantum computers that are expected to be invested at the time of the universe to be able to crack it. Okay, so Bitcoin's actual network is quantum hard. If you take a look at that network that you're looking at today, 25 years ago, you were actually looking at the internet. But we'll go on to that in a little moment. So right now, we take a look at the velocity of money, which means how often does Bitcoin turn? Bitcoin as a currency can do about 5 to 6 transactions per second. Visa does 20,000. It may not be our best currency, but the velocity of Bitcoin is somewhere around the velocity of M2 because it's being started to be hoarded and used as a store of value. Well, if we take a look at the quantity theory of money, which is the inverse of the price, equals the transaction divided by the amount of money that's out there and its velocity. And if we say, okay, we're looking at a velocity of 2, there were $90 trillion of Bitcoin transactions done last year. How many of them were probably used for purchasing goods and services? I think we're being generous if we say 1%. But 1% of $90 trillion is still 900 billion. So let's just take it down to 750 billion. And a velocity of 2 tells us on a transaction value, Bitcoin should probably be somewhere around $12,000 to $18,000 per Bitcoin. What's Bitcoin? Slightly under that, but it doesn't tell me that there's anything out of touch. The issue is, those are a lot of variables, and each one of those variables needs a much longer speech to go into. But I wanted to make sure I spent some time on this. This is probably, for me, one of the best diagrams that was ever made. It was done by Joel Monegro. Joel Monegro was a young 26, I believe he's 26 or 27, analyst with Union Square Ventures. He knows everything Bitcoin blockchain. Chris Berniski, our partner, he left ARC, and he joined up with Joel Monegro to create Placeholder VC, which is a company to invest in ICOs and really understand the space. But he produced this as a white paper for Union Square Ventures, which says the internet facilitates the unsecured free movement of information. We all know that. For 25 years, that's been the adoption rate, but it certainly is. But who owns the internet? Who owns the protocol layer? Who owns the TCP/IP? Who owns the HTTPS // ... Okay? We don't know. Well, nobody does. It was given to us by the US Defense Department, among others, but the protocol layer does not generate any money. The money was made by Google, Amazon, all the applications that sit up on top of a free protocol layer. If you were paid 35 cents for for every email ever sent around the world, your protocol layer would be $1 gazillion. So let's take a look at, if the definition of the internet is unsecure free movement of information, the blockchain is the secure movement of value, wealth, money, ownership, title. So what's worth more, unsecured movement of information or secure movement of ownership, wealth, title, and money? Arguably, the secure movement. Now, the protocol layer, or the application layers that sit on the top, are now what we call coding. A good 27-year-old can code an application to sit on the Ethereum blockchain in a good weekend. They call them hackathons, to create applications in 48 hours to sit on one of these major blockchains, to do everything that we've talked about and everybody else has talked about today. The application layer has no barriers to entry. Anyone can create it. They can be done a lot faster than they used to be. But it's not going to be worth as much as the fact that they actually have to pay to get access to the protocol layer. So now that you've created your software, you now actually are paying or investing in the blockchain, and that's where the wealth is going to create it. If the protocol layer of the internet is $1 gazillion, let's start at the protocol layer of the blockchain is $1 gazillion plus one, and we'll figure out where that all gets divided later. We are, as I mentioned before, the only regulated firm in Canada that can deal in multi-cryptocurrencies. We do have a hedge fund that's out and available. And I think what's really important, and the reason why most of the people are here today, the growth of this digital asset space is very much a reality, with many uncertainties and many unknowns. Money as we know it could very well be changing. You can resist it, but it's way better to get involved at the beginning. So be informed. It's very important to be informed, and I congratulate you all for coming here to be informed. Number two, be prudent and be cautious. It's a wild world out there. Forget about the first three. I had the first three down pat, no problem. I had to have 7 university students in my basement last summer to keep up with the number of coins that were being launched. Now there's obviously north of 1,800, of which many are probably worthless. So be prudent, be cautious, but finally participate. There is $200 trillion of money in the world. If Bitcoin captures a 1% market share, that's $2 trillion for a 1% market share. That's $2 trillion, which probably puts your Bitcoin somewhere north of 100,000 by the time we get to that 1%. Okay, so you have to participate. And the one question I get from everybody is, how much do we participate? And I said, I don't know, that's up to you, but I'm pretty sure your asset allocation to this exciting dynamic asset class is greater than 0. Thank you very much. I hope you all enjoyed that. before we leave, does anybody, whose birthday is closest to July 19th? There we go. July 19th, you get to win the book. This is Chris Berniski's book, Crypto Assets, the Innovative Investor's Guides to Bitcoin and Beyond. Congratulations. Perfect.